Alright guys, glad to have you on board again. Today we're going to update both cryptocurrencies and general stock market sentiment. Still not with the video recorded stuff and all of those things. It's just, I mean, confinement is going on right now. And I really need a haircut before recording myself on camera. So as these things are not possible in France right now, I'm just going to wait for these guys to work again before recording myself. Anyway, still, the current major points, both crypto and indices, are to figure out what the fuck is going on. It's not going to be easy task. I'm going to start with cryptocurrencies because I guess this is what you guys care the most about. So here is what I have. Still the same old things. I don't really think these things are bearish. People tend to overreact when the sentiment just changes. And as once again, people tend to believe at binary choices, bullish, bearish, goes up, goes down, and they totally forget about the in-between, which is ranging, and definitely feels like the most appropriate structure to me because we just go out of breaking resistances and we fail toward a resistance, which means, oh man, that's just normal. Bullish trends don't break resistances like they weren't even existing. At some point, they need to consolidate before eventually breaking, and if they fail to break multiple times, then they retrace to longer time frame supports. So that is what I think is at play right now. So do I really think we're going to crack the fuck out back to 13 or 12k? Well, that's a possibility if we do have some kind of a speculative crashing structure, and we can have that because once again some people were leveraged and stuff like that. But when I look at the volume, none of this feels like probable to me. Okay, so of course in here I'm having a look at Bitstamp, and Bitstamp certainly doesn't allow a leverage position. So in here it's just cash, and what I see is definitely not a burst of volume. So I don't see people rushing out the exit door. All I see in here is a market ready to consolidate below a major resistance. This is fucking ATH. So in here, do we have decent conditions to consolidate? Fuck yes, we do. And I totally told you that this was very likely going to come over. So the question now is, how deep are we going to consolidate, and eventually how low could we go? So in the major perspective, I think the major support that we have out there is definitely not going to break. So this is the maximum potential retracement, but you already know about this one we talked about last week. So the thing is that there is a lot of in-betweens. We don't have to get there. It's just we can go down there. That would be the most attractive bullish prices we could get, in my personal opinion. But that doesn't necessarily mean we'll get there. Once again, if the demand overcomes the supply, or if people are asking for it more than there is supply for it, then of course prices will be maintained. And that's what I think is at play right now. And I see the fact that people don't necessarily rush out the cash, and specifically on exchanges in which smart money is trading. And as you can see, they're not pulling off the gains. They're probably just risk managing, short selling derivative contracts, and all of those things I do myself as well. So I think this is what this is all about, not cashing out the Bitcoin, because I definitely think that we have started something recently, something that is going to last much longer than you think right now, but it's not necessarily immediate. And when we reach out major resistance, we've got to spend some time to spread some cash and manage some risks, because that's what smart money does. We don't go straight line point A to point B. People got used to it because most of them have been learning trading through bubble trading, which is definitely not the standard way of doing stuff. Okay, so if the smart money is in, they're going to build a trend, and a trend needs respirations in between. They need breathe in, breathe out, risk limitation stuff. Okay, because smart money doesn't go FOMO, whatever the fuck that is. They let you do FOMO, but they will risk manage no matter what. Okay, so what matters to me right now is not necessarily figuring out what Bitcoin could do, but just how deep could we retrace. Of course, if I take the multiple trending references, and if I consider the previous H4 bottom as a reference bottom, which I still question, let me be honest, then in that perspective we would be dealing with the first level of retracement considerably good enough for a trend follow trade, which means that's the early first fucking level available to trend follow. So of course we retrace out there. It's just a 23% fib. Okay, there are plenty of other downside retracement that we could reach out to. The 38% has also an already tested support, so that's kind of a level we could reach out to. There's of course one in here with the 61% retracement and stuff stuff like that. So there's definitely plenty of opportunities and level we could reach out to. Okay, so I think that before breaking all of these in a straight line, we really need a catalyst. So if we do find a strong catalyst, then of course we will have to worry about that. But until then, all I see is that we had quite some exit structures. And what did we do out there? Holding the fucking candle close at the top of the resistance context, which is great. It's really a sign of strength. So I see Bitcoin being strong. Of course, in here we created the divergence and we pull back to the support. That's exactly the fucking target of a divergence. So I wouldn't nearly be bearish at that point. We are on supportive areas with a market that topped out with a divergence structure and just terminated the fucking cycle associated with it. So as long as we hold on to this support, this thing isn't bearish. If it breaks it down, then this is where the consolidation starts. But at that point, it's more of a potential trend following opportunity. Of course, you just can't buy a straight line to the downside, which means if the market ranges out there and gets a mature range, we'll be fucking ready to trade it again and buy it. So all I'm telling out there is we need patience. We need to figure out if this support is going to hold on, yes or no. And there is not a goddamn clue about that at the moment. We just need to let it happen. Okay, that's what this is about. But if you want reference level right now, if you are bullish, you need to wait for the next context close. It's going to happen on the 30th of November. Okay, and we got plenty of time ahead of this. And if we spend that time just building a mature range, then we'll definitely keep on going early December. Okay, that's simple as that. So right now, if you're really worried about potential price drop, that means you are either over leveraged or badly managed your risks. Because right now, I personally don't even give a fuck about what happens. If prices retrace down there, I'm going to buy. And anything that happens in between is none of my concern as long as I don't have a mature range. I'll eventually consider buying in again at higher valuations only if I have a mature range. Until then, price monitoring and not acting is my personal choice. What matters to me is what we can do with the altcoins, because some of these I have profit taken, some others I've missed a shot very quickly and actually I wanted this level for Ripple. I wanted 85, okay? But the thing is that I just figured out some exchanges got there, some other exchanges did not, and that's pretty much a big mess because at least the one I was looking at, Bitstamp, got pretty far away from it, so I still believe there is potential out there. Anyway, we'll see all about it. It's just at the moment in here, what we care about is not necessarily being too aggressive. Same thing goes in here, just the levels of retracement gets deeper. Okay, we've seen that, for example, if we have a look at Ethereum, we've seen that Bitcoin is retracing 23%, and of course, altcoins being riskier and more volatile, Ethereum has got it to 38%, but that's the same old thing out there. We do have a bullish context, bullish moving average, and we still have, as we speak, bullish trend channels. So god damn it, how can you turn these things to be bearish? Yes, we did have an overextended thing. We definitely hear some parabolic scheming structures. Okay, goddamn, yes, but until then, retracing to a trend line never meant that the market will collapse. Is this a bubble? No, it's a bubble-ish wave. But it's definitely not a bubble. Take it in account. If that is a bubble, then Jesus, you really need to think twice about it. This is just a bullish wave that has ended up as a little bit of a FOMO, and it probably can consolidate, but that doesn't mean it's going to fuck up each and every support like we did years ago. It's definitely not the same structure. And like I told you, this is now a confirmed bottom. At least I definitely think it is. And until I am proven wrong, I'm going to considering it that way. That means higher low points over long term means we're going to grind our way up step by step. And that doesn't mean we're at early stages of doing such a thing. So there is still a support out there. And if we have to retrace right down there, I would be okay. That can definitely happen. That's the same thing as Bitcoin. I doubt Ethereum can go below these levels, but it can go there. And what I care about is, are we going to go there? Or are we going to build mature range in between and keep pushing, which feels pretty fucking probable to me at that point. I'm just waiting for the market to give me the answer. Okay? That's all about it. It's not more complicated than that. Okay? So the thing is that we're going to spare that for this week's this weekend update into TradingView, in which I'm going to review each and every one of those assets, because of course every altcoin has a different risk management structure. Some really have been doing some good performance, some others have really gone FOMO recently, like these two guys, and some others have been really weak, like Link and Cardano. So many different structures, and we're going to study each one of these, because each one of these will have different management to perform depending on the consolidation structures, different levels, different targets, and we get to save that for this weekend. Okay, now that being said, let's switch to the stock market, and here is what I have. Okay, if I take the S&P 500 weekly basis stuff, I'm just going to take out this thing because now the range is pretty mature and we don't need this on the high time frame. Okay, here it is. This is nothing I need either. Okay, so here we go. Weekly chart time frame, still the same old thing. All right, take the cycle as a reference. Okay, we got one big cycle in here, breakout, positive moving average, rising over the context. All of those things means trend. What's going on back then? Okay, so we had a trend, we terminated this cycle, kind of created a ugly pullback structure, whatever out there. Okay, but considering it as cycle, major cycle. Okay, so anytime we complete going from one extreme level to another means we've completed a cycle. Okay, so one cycle, because we go from bottom to bottom. Okay, full oscillation, positive and negative. So that means we have two tops in here, one in here, and an intermediate one, and we always take the tangent level to this. Okay, so that would be this trend line to me. So we're still trading across this trend line over the short-term periods. We were trying to figure out which one of the probabilities we would have, because we could have been ranging on top of this level, ranging on the bottom of this level, and we actually somehow turned out to make something more of an oscillating across the level. Okay, so we could have done this with a positive vision, this with a negative vision, and of course we've decided to go halfway through it, in which we just oscillate across, which means we're both positive and negative, and this is our reference level. So we now have switched to the positive vision of this thing, as long as we keep up that momentum. So I wouldn't bet for a reversal right now, definitely not. I've got nothing suggesting such a thing is probable. We kind of actually even starting to look for breakouts, so I would still have a slightly positively tainted stuff out there, but I'm also really questioning the fact about, can we really go above this trend line? Can we really get away from this? Or are we really just trapping the DOMs before retracing violently and just grinding our way up step by step really slowly? Okay, that's what I think is the underlying risk. Because if you buy a goddamn resistance, you need to pay a freakingly expensive stop loss regarding the very teeny tiny projections you want to get to. Okay, so yeah, I'm still concerned about the fact that the potential is very limited at that point. And I doubt we have the strength to really accelerate out of these areas regarding the current context. I think, yes, waiting for positive news is what we care about, and certainly most importantly, avoiding bad negative things, okay? So as long as we do not have negative news at the moment, or at least none that the market cares about, well, that's like I said, we lack of positive news, but we got not enough reasonably bad news to reverse, so we're just oscillating across the level with a positive bias. So that's all about it. On my personal vision, I'm not going to trade against this market, but I'm not going to follow either. Okay? That's all about it. Pretty boring. I'm waiting to see and have an answer. What I look for is the derivative lecture. Okay, we still have no answers from the Nasdaq to Dow Jones oscillative crossover, but until then I'm looking at the VIX, and the VIX is giving quite some interesting signals. The VIX definitely looks like it wants to break and close this gap. That would be good, of course, but that means also we're gonna have to get to some pretty stupid levels of volatility. We would have to retrace right down to something like 17, 18, 16. All of these volatility levels are totally unreliable to the current context. These are levels we shouldn't be heading to, but once again, so many people selling volatility, and that has really become the latest year's gamble. Very dangerous, and once again, this so reminds me of people trading CDSs back then and who created the financial crisis of 2008. So we do take heavy amounts of risk. That doesn't mean they will necessarily pull an explosion out there, but once again, you need to price in those risks. If you're fully invested into risky assets right now, like crypto, stocks, whatever, all of those things could take a hard hit if we were going down a financial crisis, because people will need money, and if they invested a lot, either cryptocurrencies and stocks, they will have to sell these to get the cash. And not everyone will be willing to buy these stocks, specifically not the smart money. They probably are looking for much cheaper prices to buy you out. So that's the problem. Lots of people might need cash, with people not willing to pay for high prices for it. So to pay high prices for stocks and the assets you've got. So be patient and make sure, once again, that if you invested for a few years, which is most of you guys have been doing, leverage is out of order. That's really not even a possibility at that point. No leverage, definitely not. And more importantly, have some spare cash. Make sure that you have some cash available, because if you buy and hold, and if we end up with a nasty crisis, you're going to have to pay for your bills. It's not going to last forever, if it ever happens at least, because it's not even for sure. Some people sell it like it's inevitable, and god damn it, nothing ever is. So you can't trade with the fear of a crisis going along the way. It's definitely not how we do things, but you need to assess the probabilities. They're pretty fucking low, so we need to trade bullish, but we need to be careful. Have some cash so that if the shit hits the fan for 1 or eventually up to 2 to 3 years, you're gonna have to be able to give up on your trades. Just let them go ahead, okay? If you bought and hold, you need to be ready for these prices to go down, and you must be ready to have available cash so you're not forced to sell, okay? That's what it is all about, okay? The problem with crisis and debt crisis is that people are forced to sell because they need money to live. Okay, so don't be dumb enough, okay? No leverage and spared cash. You need to have liquidity, liquid assets on your portfolios so you can pay for your bills if the wrong things turn out to happen, okay? Very less likely in my personal opinion. Then the gold, okay? Here is really one that matters. I'm looking at bullish signals. In here, I already have a favorable momentum. Remember that these bullish patterns can last for a little longer, and most importantly, they matter only when prices trade on trend channels. So that's the reason why I cared about this area on gold. This is also an horizontal support. That's the reason why I am personally speculatively trading this area, but I'm looking for a fucking confirmation trade, which I still do not have at the moment. I have early reactions but very weak signals on the lower time frame. I'm still buying in, but very aggressively, and this is very much for speculators because that's a 4th range boundary. It's actually even a 6th one if you consider this one as being a true one, which it is. Okay, it's just very fast, but in here we do have an indicator delay pattern. So we're on the 6th wave of this pattern. I'm still questioning whether or not we truly broken that support, okay? Or if that was just the typical bullshit in which this is a range breakout to extend the range and we're going to buy this area out. So I'm speculative, okay? Like I said, I know the risk. I know how to handle these. If you don't, then just don't do it. It's really risky, okay? So I'll see if this string validates and returns up the resistance and take it over back as a support, then I'll be goddamn nice to buy this thing again with a stop loss out there. Okay, so I'll let you know, but of course don't get into taking this trade. It's really complicated at that point, and we can retrace to some more lower Fibonacci levels. Okay, so this is the area, the next area in which I will be trading gold eventually if this one doesn't hold on. But this one has to be reintegrated. Okay, we need to retrace back up there today or tomorrow. I don't want a weekly candle close at the bottom, otherwise that would be a fairly bad sign. Okay, and finally, last but not least, still the same goddamn EURJPY, because Eurodollar is looking at breaking resistances. Once again, so many people fighting against that. This thing has a mature fucking range. This is a trend limited level of retracement. God damn it, if that isn't trend follow, I don't know what that is. I see so many people calling for trend follow trade, whatever. It has been the thing over the latest few quarters, and now, god damn it, I see the same old stupid guys just saying we should sell Eurodollar. What the fuck is going on? You cannot say trend follow on these stocks and these stocks and use the same old structure but tell people to trade them the opposite way. I just don't get it. If you call for trend follow, then you've got a freaking trend follow opportunity out there, okay? So don't fight against the Eurodollar. Plenty of room ahead. We're definitely not going to go to the moon, but we can go up to the next context area. Definitely we can, okay? And this is something that will not readjust until January 2021. So can we go out there until then? I definitely think we can. That's 1.22, and this is not very far away. What I care about is most importantly how people deal with USD/JPY in between. Is USD/JPY going to be sold because of dollar? Or is it going to hold on in there in an ugly fat range because people get to buy euro, but they do not buy yen? Okay, and in that perspective, EURJPY will stay in here and eventually retrace up the resistances. If that's the case, that means people don't really fear about underlying risks. They would just do the usual euro versus US arbitrage, saying euro is piece of crap and US is real great for growth. So we get into dollars and we fuck the French guys or fuck the euro guys. Okay, so that's the typical, I think, stupid arbitrage, but can last. Okay, we have room for euro dollar. But in that perspective, if people get to overweight euro versus yen, that means they don't perceive any single risk for stocks. Okay, that would be pretty bullish for stocks. Because, of course, if you shrink dollar valuation, all of the multinational companies will bring more dollars back home, though more profits, and more profits means higher selling prices for the shares. Okay, and that's also more competitive for investors and stuff like that. So it's really all of those things. Having a cheaper dollar, as long as it is not priced against the yen, means good for the US. Okay, at least that's competitive monetary devaluations. Of course, Europe will try to fight it at some point, but there's nothing they can do about it. So this is the thing, okay? As long as it goes that way, and this is pretty positive for stocks generally. If it starts locking on the yen instead of euro to depreciate the dollar, then that means investors are not following this plan and they're betting against riskier assets. Until then, all we have in here is a goddamn range. So as long as we do not break this range, there's nothing we care about. Though the only thing we care about is how will we behave with this resistant context, which is orientated to the downside. The moving average is going totally flat and we have a positive context. So if we get there, there's definitely going to be some underlying supports. If we get there where we nearly are, there's going to be some resistance. I care about which one is going to break first. Okay? So until then, I kind of think that we're locked in between these levels, though I'm waiting for these assets to tell me what to do. Okay, so that being said, that's all for today. I'll see you guys throughout the weekend. Eventually a podcast tomorrow if I have things to talk about, which I doubt, which means we're probably going to see each other again this weekend in TradingView for the regular weekly updates. Bye, guys.